evening. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up is for Tuesday, the 31st of August, last trading day of the month for 2021, and we're at 5:16 p.m. Central Time. So, a couple of things. You're going to get quieter now as the market moves on towards Friday. Why? Because that's the jobs data report, and then we're not open for normal trading on Monday with the Labor Day holiday coming up. So please remember that, all right? And trading does typically get a bit lighter. I like what gold has done. It's got an embedded slow stochastic reading, which means until it's lost on the pullbacks in the market, I look for the pros to step in and buy. We got up to some resistance, so we'll fight with that. We have in the energy market the OPEC meeting tomorrow, so you want to pay good attention to that. The API number is not going to be exciting one way or the other in the marketplace right now because of Hurricane Ida, obviously, and the OPEC meeting, so it doesn't really matter what they were. In the bonds and notes, we're just sort of marking time until Friday, and then we'll see if the market wants to do anything, but Friday will be the interesting day of the week. The dollar index down a fraction today, but in the evening we're backing off even more in some of the foreign currencies, as you can see. Stock market, well, it's back up today, but it did pull back as we were looking at the marketplace. So, in the gold, you know where the battleground is. I've said it to you, and I've been talking about it for a while. I said on the way back up, it would be where the 18-day average of closes, that's 1840. You're sitting at 1815, and you got up this week so far to 1823.60. You're fighting right at that number. When we look at the action on the chart here, you see that the market has a pattern of higher lows, higher highs. That's bullish. The market is trading over the 18-day average. That gives it upside bias, and the resistance is right at the 200-day average, the gray line, and the green is the 100. Do you disagree with me? I've been saying before it got up there that if it continued rallying, I started saying that here, it had tested the 100, and there's further tests if it continues to rally, which it's done, and it's backed off from there, and you're still fighting right at that number. It's doing its job in the resistance, but like anything else, if you build a wall and you keep hitting it with a tractor, eventually the wall's going to come down. Maybe you need something larger than a tractor, but I think you get my point. If the market can clear this area, the next area is 1840.60 for the resistance point, and you have an embedded reading. That tells me that on pullbacks, the trade will be supportive to the market unless and until the red line closes under a 79 reading. That's how I'm viewing the market. Therefore, I am in the bull camp. When we take a look at the gold-silver ratio, it's still a little bit stronger for the gold market. You see why? Because silver's got that Bollinger Band literally right above it. It missed going to it today, but it's overbought. It is not good looking like the gold is. Plain and simple. Copper market. Market ran up 2 days ago to the upper 100-day average. That's the resistance point. You should be impressed with it. Everything that came out of China, their factory gate orders, everything that's come out on their service industry is all gone into a contraction. And during that, copper has come back very strong. Now, the miners still have a problem in Chile, as you know. The mines have not accepted, and the miners have not accepted, the owners and the workers, any form of a deal. At the same time, there is a tax now moving through their chambers there to increase the cost of the production of copper. They want to get a bigger tax. They already get a tax, so don't think that copper isn't taxed there. It is, but it's the size of the tax that'll now be what's going to happen. In other words, the country, because of pandemic, sees an opening, Chile, and it wants to get more revenue to help its people. When you look at the platinum market, the battleground has been and remains the 18-day average of closes, but with the close of business, today you had an outside day up, you have higher lows, and therefore higher high from back there, I believe. I think it was. Maybe I'm wrong. No, I'm right. And that's because the high here today, I take that back. Maybe I am wrong. You don't know on the chart. I can be wrong. 10, 19, 10. I am wrong. You do not have higher lows, higher highs. You got lower highs, higher lows. Very important. What you have is an outside day up. If you take out the lows of today, and those lows were 10, right here, 992. If 992 is taken out, then I'm looking for a pullback into the 963.90 level. Therefore, I think the pros are supporting the market at the 18-day average, trying to pop through this 1014.20. If it can do that, finally I got my wording right in the chart action, then I'll look for 1034.10. I was just wrong on where I put the arrow. Palladium has had a pattern. This is a contra-trend rally. Let me explain it. When a market is under the 18-day average of closes and you rally back to it, you often do that. It's a contra-trend rally because the bias has been down. So you know you're in an uptrend on the trend, but it's called contra-trend, not uptrend, because as long as you stay under that 18-day average, the bias is down. Momentum in the market is up, but until you close over 24.99.30, what happens here is this is where the pros, I believe, are selling the market again, trying to stop the rally. When we take a look at the dollar index has fallen down to 92.39.5, just missed the lower Bollinger Band in an oversold condition. That may have been it for this swing down in front of the jobs report. I'd be cautious with it. The market has had a nice breakdown. First challenge of the lower band, and you can see you failed at the upper. Why wouldn't you fail in that zone? I know some people talk perfection. You have to hit it. Within a tick, you're pretty close. That's what the rule says to me. Plus, you're oversold. I want to remind you, there's a lot of you out there that will be coming into the futures markets now. Why? Because we're going into September. It's the season. The market has a lot of fun going with it. You may want to work with brokers with some experience, not somebody hired off the street. My brokers have 20 or more years experience with me. So they're not people I'm hiring from other firms. These people have been with me. They know how to work. They can help you place your own orders. They can help you open accounts. They can help you in a number of different ways, including being a broker, getting reports out to you, talking to you. It's your choice type of account you want to work with. They can set up really deeply discounted commissions, and you pay for only the need that you want. Could it be any simpler? That's how brokerage works today. As you know, they're already fighting with stock firms now, the SEC taking a look on this pay for brokerage that has happened where Citadel and the other firms pay the brokerage firms. I'm not saying it's going to be outlawed. They are looking at it and trying to figure out, do they want to keep that model alive? If it goes away, you're going to see a whole different price structure come about in stock brokerage firms. I know because I owned one. But in any case, this is how commodities work. You don't get paid for giving me the order or giving somebody else the order. As a brokerage firm, we place it in the electronic platforms for you, or you place